Good evening, traders. Wanted to welcome you to a fantastic Monday evening. I'm here in Las Vegas, Nevada, and wanted to show you a couple of highlights, some of the highlights from the day. Here's a chart of the ES as it was at close today. Well, right around 1605. It really doesn't matter if that's the last 10 minutes of the market. I wanted to show you a couple of things, show you some opportunities that you had today. First of all, I got up early. I got up about 5 o'clock this morning, which is right in here, the New York Open, which was 8 a.m. The market opens at 8. Start trading equities at 8:30, and the futures market opens at 9:30. The first thing you'll notice about this chart is that it was a very up day. Obviously, the momentum for most of the day until about we're looking at about 2 o'clock. About 2 o'clock was definitely up to the upside. Looking at the market, doing a pre-market analysis, I got up right in this area here, 5 to 5:30. You can definitely see the trend was up for the day. Couple things that I look at. I draw my fib lines on the midnight, based on midnight open, and here's yesterday's high. Actually, it was Friday's high, and then Friday's high and Friday's low, and the 50% line I look at to determine. And let me go ahead and pop this up. I'm looking at what's going on in the market. So what happens is I take my fib from here to here, and then draw that to see what's going on. The 50% line goes on the midnight open. So drawing a fib from here to here, and then putting whatever that midpoint is, which was right around here, moving that down here to the 50% line, which was the midnight open at 2166.75. Gives us some levels. You can see 100% level here, and you'll see a 0% level. Let me see if I can move this down a little bit, and you'll see the 0%. And there it is. Minus negative 23.8 down here. So anyway, I don't have all of the fibs drawn on this particular chart. I don't have. This is not the trading platform I set up, and it's not exactly the same as my regular trading platform, and not exactly sure why all the levels are not showing out, but the important ones are. The important ones are 100% up here, 61.8% here, 50% here, which is right on today's open, and then 38.2. Okay, and here's the whole key to that. I'm going to pop this up. This is something that I did earlier that I posted on Facebook, basically laying out the strategy. You draw it on the previous day's high and low from midnight to midnight, draw the fib, move the 50% line to today's open. Now, where's price action? And here's my trigger point. So I look at a 61.8 trigger point. If price action goes above 61.8, I'm going to go and get into the long. I'm going to go long. If price drops below 38.2, okay, I'm going to go short. All right. As you can see, here's the London high, here's the London low. The London high was just above 61.8, which is just happened to be right at the pivot point. Okay. So what happened is price action came up, pulled back. I had posted about this on Twitter. Watch for the pullback. And you almost always have a pullback, and sometimes that's pre-market. sometimes you can have a pullback, you know, anytime between the New York Open at 8 a.m. Eastern Time and 9:30. Any time in there you can have a pullback. Watch for that pullback, because that pullback is important, because what that will do is that will prevent you from getting in, say for example up here, and then taking a whole lot of heat as the market pulls back. So if you'd have got in, say for example, you'd have seen down here at 8:30 the market crested, pushed above 61.8. If you'd have gone long at this particular point, say for example at the midpoint 2170.25 or so, let me go ahead and bring that down. If you'd have gone, say for example, long up here, you would have taken one, you know, you would have taken about 3 ticks, maybe more, of heat, because the top of that movement, okay, what is this? 2171.75, 2169.50. So that's that's 9 ticks of heat if you'd got it up here. So always look for that pullback. Okay, you will almost always see that pullback unless there's some very unusual market conditions that's driving you upside. But as the New York, like I said, at the New York Open, watch for the pullback here, and then it takes off to the upside. So the moment you see that pullback, it's kind of like pulling back the bow. You hit the 2170.25 to 61.8, and somebody let that bow go. Guess what happened? Boom, went right to the upside. And people go, "Why? You know, it didn't go to the wasn't going to go to the downside." Well, take a look at the chart. Look at the 2163.25 level. There's your trigger level to the downside. If after market open, 9:30 cash open, if the market penetrated that level, you know, a couple of ticks, and did not show, you know, with some momentum, you know it's going to go to the downside. Well, exactly, it never even came close. The closest it came was right there, which was the, let's see, that was the London low, and that was 2164.75. So, you know, that's, what was that? Was that 6 ticks away? So it didn't, you know, from the market perspective, it didn't even come close. So you go to the upside. Here's your target. Your target's up here, 2181.50. Okay, we're working off the midnight chart now. So now what we do, we have our entry down here, and we have our exit right up here. Okay, so enter at 2170.25, exit at 2181.50. Okay, now, excuse me. So the market opens. What happens? Bam. Okay, I got my DLL automatically draws me a new set of fibs. Okay, here's our 73.6, which is, I don't show it on here. Yes, I do actually. There it is. At this particular point, oh, I don't have it. There we go. Let me. I had this stopped so that it would draw the levels back on there. See, you'll notice it drew back to the 50% line here, and then took off to the upside. So the moment it breached that, boom, you're into the long. Let me play this just a little bit, because I want you to see the, well, it's not going to show it. Right here is Morales, this is Morales H3 level, okay, right here, okay. There. So his H3 level, this was the L3 level predicted for the next day. You'll see the Morales H3 level is 2176.75. If you'll notice, see this right here? See all that junk right there? That's where the market basically chopped back and forth, back and forth, back and forth, and then finally took off to the upside and hit our target right in here. Came within 1 tick here. Could have gotten out here. You could have, and this was, oh, you're looking at about 11:45. You could have gotten out here. Could have gotten out here when it touched it at 12:10, or you could have waited all the way over here at 130, when it reached 2181.50 and got you that additional tick or two. Me personally, I front run my targets by 3 ticks or so. So 3 ticks. If I got out down here at Morales level, simply because I was kind of strapped for time, and it was like 7 o'clock, and I just saw how the market was chopping in here, and thought, hey, you know what? There's no way I'm getting out of here. There's no way I'm gonna do anything. So no way the market's just gonna chop here for a while. And actually, it did. It didn't really go to the upside until, and this was like what 9:45. Right in this area here. 10 o'clock. I realized at 10 o'clock it was just going to kind of fiddle around here. So it did not really even break to the upside until you had that doji there, which was at 11:35, 11:40. 11:45 you would have been out of that trade, but you would have sat through this 2 hours worth of choppy junk down here. But if you're having an automated system, or if you're sitting there with breakfast in your hand and talking to a bunch of traders and having a good time just kind of chatting about the market, that would have been cool. So, or just go to lunch and set a stop loss. You could have set your stop loss down back here at your open. You could have set your stop loss at, 73.6 would not have been a good level, because you would have gotten stopped out. If you'd have put your level right here, down here at the cash open, 61.8, okay? That's a good level. The market never even came close to that. So you could have gotten into that trade at, let's see, we're talking about 2170, 25, 2169.75, which was the cash open. You could have gotten into that trade down here, even at, if you wanted to say, look, I want to get in at 2177.25, okay, or 2170.50. You're still looking at, a decent profit of 2181.50. So you're looking at what? You're looking at 10 points a profit, and you can be pretty sure it's gonna hit this thing. You front run it by 2 or 3 ticks, and you're good to go. So again, we're looking at the midnight open. We're looking at all the levels on the midnight open, and the cash open is just confirming what we're seeing at the night open. Couple of things I also wanted to show you right here. See the open here? See how the CCI never really comes back down? It comes almost back down to 0 right there, and that's at 10:35, where it basically bottoms out right here at 2175.25. If you want to get out there, that's 5 points. That's pretty respectable. You're running one contract. That's what, $250. So 300 actually. So 250 times $50 a point. So you're looking at you're looking at 5 points. So $250. That's a respectable for one contract. If you're running 2 contracts, $500 profit. You're good to go. There we go. At 10:35. If you wanted to say, you know what, if it crosses the 0 line, then I'm out. Okay, that's pretty interesting. You'll notice it didn't cross the 0 line until about 12:40, right in here. And I can go ahead and pull this back. You'll see that. That was at 12:30. It hit the 0 line, which is right there. 2179.25. So you could have gotten out. You could have gotten out there and made some respectable profit. The zero line, and this is kind of an important line here, the zero line on the CCI is usually an indicator of a trend change. When you see the CCI crossing either above or below the zero line, most people tend to think, you know what, there's a trend change there. So, and you'll see that right up in here, where definitely it is crossed below the zero line. What did the market do? Here you go. There's a definite pullback. But even if you'd have ridden this thing all day long, you still would have made some nice coin if you had got in. If you got in right down here at that 21.70.25, right around in here. So anyway, I think that's pretty much market. The lines that you see here, you'll notice one more thing. You'll notice that everything was green from right down in here. All my trend lines are green. You're looking at my 200 EMA, your 89 EMA, your 50 SMA, your volatility index. Everything basically is you know, we're heading up. We're heading upside. So there's a lot of indicators that we're going long today. You'll notice this guy here. These are called Hurst bands. This is the middle Hurst band, upper and lower middle Hurst band. And you'll notice that price action pretty much kept within that Hurst band. So you could have ridden that up and said, you know what, if it penetrates the lower Hurst band, I'm out. You know, or if it penetrates that 50 SMA, I'm out. You could have done that and got out right up here and made some money. Or you could have done what I and Pat have talked about, is trading to a target. Here's your target. And that's a really good, respectable 100% target. I don't think we made 113% was up in here. We didn't make 113, but we made 100% based on the midnight open. Anyway, I sincerely hope that helped everybody basically show you why we went long this morning and what was in our heads, how we're interpreting the charts. If we missed anything, feel free to leave comments on the video. Have an absolutely wonderful evening.